Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
The show is brought to you by Miles Franklin. When it comes to protecting your wealth, you know there's nothing better than gold and silver. And when I want gold and silver, I go to Miles Franklin because they've been around 22 years, and when you buy, they ship. For more information, go to milesfranklin.com or call them at 800-822-8080 and get a free quote. 1490 WGCH, this is Carrie Lutz, and you're listening to the Financial Survival Network. If you're wondering how to make money in these volatile markets, when's the time to buy and when's the time to sell, well, you need to listen to Andrew Horowitz of thedisciplinedinvestor.com because, as the name implies, he's got the discipline for making money. Andrew, welcome back to the Financial Survival Network.
Hey, Kerry, how are you? Glad to talk to you again. I've been listening to some of your shows. Great stuff, buddy.
Thanks so much. I've been watching these markets whipsaw everybody, but God, the start to the year has been breathtaking, hasn't it?
Unbelievable. Here's what I say. It seems like everybody woke up on January 1st or January 2nd, or the clock struck 12, midnight, New Year's Eve, and everybody said, you know what? I want to buy stocks. Because all of a sudden they walked in on that day, on that Monday, whatever it was, and the markets reopened after the year for 2012. And they said, you know what, we're buying stocks when they were really skittish before that. So it's really quite an amazing turnaround, the kind of what happened. And then from there, it was, until just recently, almost every day, without fail, either up or barely down. And only twice did we have two back-to-back days of down markets and a day that was more than 1% down. So pretty amazing situation that's going on.
It's remarkable. There's so much money on the sidelines. And speaking of that, what was your take on Apple's move to institute a dividend, do share buybacks, and really become, I don't want to call it shareholder friendly because that's a little too extreme, but more concerned about how the market perceives the stock rather than the company?
Yeah, obviously they bowed to the pressure of the market, something that Steve Jobs would have never have done. And at the same time, though, you have to realize that with $100 plus or minus $1 billion in cash, there's just not much they can do with that. They really, you're going to have to buy a mid-size developing country for that money, okay?
Or buy Google, right? They could buy Google or Microsoft and Yahoo and roll them up, do a roll-up.
Yeah, exactly. So the thing is that when you're looking at, I think, what they did, it was a very good move in terms of the overall appeasement. It also allowed for a lot more funds and hedge fund managers and those that are in the area of income investing or balanced that have a requirement to have a dividend on the stock before they buy it. It now opens up that whole world to Microsoft, to Apple. And that was a good thing because it really helped things along and all that. Now, is it something that was really necessary? No, they didn't need to do it. Is it nice they did it? Yeah, it's really nice they did it. But at the same time, they did a share buyback and they did a dividend, which is a net nothing for the company. You see, what happens is when you do a share buyback and at the same time you institute a dividend, they usually calculate it in such a way that the shares that they're buying back are going to be paid the dividend. So when they buy it back and extend the money out of there, they get the money back in the dividend anyway. So it's a net nothing to them. Doesn't cost them anything.
Yeah, it definitely doesn't. But like you said, they had so much cash with no ability to invest it in a way that's going to benefit the company. And do you want them to have the cash in the money market, or do you want the shareholder to have the dividend to put in their own money market? It'd be nice to see them put in a drip so that people who are getting those dividends could buy more shares. I just want to tell you a really quick, funny story. My sister, her son, worked for a large Apple VAR, and this was about, I'd say, 11, 12 years ago when Apple's stock was in the dumps. And my nephew said, buy Apple, buy Apple. So I think she bought about 100 shares at $8 each. She's now got 400 shares because it's split a bunch of times. And that could be the next thing that they do is a stock split. Wouldn't surprise me.
It's possible these days with the, we saw recently one, for example, Baidu last year. They were about 1,000 or 800, whatever it was, and they did a stock split. Google still hasn't split. They probably won't. I think that, Apple really needs to kind of figure out what, like you said, what they're going to do with their war chest of money. And I think they're being very smart because most managers right now are pretty stung still with what happened back in 2007, 2008 when they had that major drain. And don't forget, even Apple got hurt, and Apple then was revived, obviously. I think that the street is expecting Apple to have a tremendous amount of cash right now for a backstop. But at the same time, I agree with you. Generally speaking, there is nothing much that they can do that wouldn't rock the industry. They may buy something like a Nuance, maybe kind of interesting, although there may be a antitrust against that. Maybe they'll buy some more of small tuck-ins, or possibly even look at some media acquisitions, because that's the direction they're going. That would be interesting. I would say that would be probably the thing that I would look for. But other than that, I agree with you. It's kind of But right now, the stock market, it's almost every day we see a new little thing go on. Last week, there was the China situation. We saw China say, hey, you know what? After the markets have been just obliterated for the last couple of years, right? They said, we're going to allow double the foreign capital back into the market. So the Shenzhen was up about 2.8% on that news, and it had nothing to do with fundamentals or anything else. It just had to do with the liquidity. And we're still living in a world with a tremendous amount, not only liquidity, but a tremendous amount of potential liquidity that has been funneling through the markets in the trillions of dollars, and possibly no stopping it. And that's why every time you see a drop, there is corresponding buy-up. So the question is, how do you play that? Isn't that, I think that's kind of the
really
question.
That's absolutely the question.
So what we do is we have a couple of, we manage money, and we have that through the Disciplined Investor and Horowitz company. But one of the things we found, and a lot of listeners wrote us and said, do you have something, whether they don't meet our minimums or they want to do it themselves, do you have something whereas, you can give us alerts, you can give us information, and what happens from there is that we can go and then execute. Okay, so what we did is we developed with a group, and they have actually a worldwide presence, something called Trigger Point Research. Now, basically what it is we have found certain mathematically qualified levels that stocks we'll call it bounce off of, or be resistance, and then it moves through. There's a lot that goes beyond. I'm going to leave it simple. But what we did is we have now a service that will actually go out, and when a stock is, let's say, passing a zone that we consider that will be a very significant fast zone, not just creeping up, but when it's going to move and break out, break down, or bounce, we send out an email alert to the users and the members of this, and we say, hey, you know what? This is going to happen. Here's your price you need to buy it at. Here's the price that it looks like his stop level is, and here's some background. Here's a couple of charts that set it up, and we send out either text messages or we send out an email. But these are not just popping all day. These are going to be highly as we would say, qualified and high conviction alerts. And I got to tell you something, to my surprise, the take up on this, the subscribership has been amazing. I mean, It's like, yeah, because what's happened is that, there's been a lot of interest in this because people really have a need for much more than your basic charts, where we can create an algorithm that can calculate a high probability trade, which is 1 to 30 days. You're going to be in this 1 to 30 days. It's not an investment. Right. And you can see, like I'll give you the highlights. A couple of days before we saw that gigantic drop of Green Mountain Coffee,
right? We
were short. Made 25% in a day.
Wow.
We have another actually stock this week. It took 30 days and it was creeping down. We were short that with Spectrum Pharmaceuticals. We were long Carbo Ceramics for about 18%. Clean Energy Fuels for about 22%. And then there's the ones in the middle, which we kind of have, for example, we just looked at Cheesecake Factory and sent out an alert on that. And we're looking for about a 5% quick move on that, and then we'll kind of take the position off. But we lay that all out. It's not expensive. It's a monthly fee for the different types of programs. But, basically one good trade, you make it back. I mean, that's what our theory is.
I saw you had one of my favorite stocks in there on the long, company by the name of Zagg.
Yeah, we I think it was a couple of days back, we actually saw that Zagg moved through an important level. Actually, I'll give it away right now. The 1140, 1160 level, $11.40, 1160. 1160 is the breakout level. 1150 was the alert. It's trading right about 1150 right now, with the markets kind of undulating the last number of days. Right. But Zagg is, and let me say this, we don't care if Zagg makes widgets, razors, turpentine, or is in the clothing business. Okay? What we care about for this is the design of the overall chart pattern in terms of this algorithm where we look at zones which are marked on our charts by 3 different levels in range. And Zagg has the potential of just absolutely rocketing if it can get through, again, market conditions prevail, but if it can get through this like 1150, 1160 level, there's really not much above that, and there's been pretty good short interest against it. And we laid that all out in this alert. And the first day, if you would have had it, you would have about 4.5%, and right now it's back to even after the markets kind of came down some. But Zagg is on a side note, yes, fundamentally what Zagg does, they make you know what they do. Yeah, they're a cool company.
Yeah, definitely. So this is strictly technical oriented, irrespective of any of the fundamentals of the company, who owns it, what they produce, demand for their services, earnings trends. It's strictly following the algorithms there.
Yeah, it's following the algorithm and saying, you know what, I really don't care what it does, because I can tell you great stocks that are lousy, great companies that are lousy stocks to own, right?
Oh,
I can tell you about great, lousy companies that are great stocks to own. For example, one of the first ones we did was Ancestry.com. It was coming down, it was coming down, it was coming down. And we saw a level that would be, as we call, a bounce alert, a position that would be potentially where the stock would level off and it would move higher from there. So what we did is we put that bounce alert in, and sure enough, it hit. And it kind of went up about 14%, I think, right after. We had one, for example, I'll give you a good example. We put out an earnings report, which is another one of the reports we do, but also an alert about Research in Motion. We said that Research in Motion is a broken stock, but you know what? We see a point where after they come out with earnings, either way, here's the bottom of where we think the range will be. We put that out. We picked up most of the shares in the after hours, about 10 cents off the bottom. Okay. It turned around and it went higher the next day by about 7%. We made 18% overnight, closed the trade on that Friday.
Wow.
So that doesn't always happen, but I'm just saying, those are the kind of things you want to look for, because you need to know what the exact level is and put your trade in, let it sit there, do its thing, and then if it works, great. If it doesn't, okay, move out on the stop.
Okay, so you put it out there. You tell people what their stop should be, what profit they should be looking for, so that you know when to get in and you know when to get out.
Yeah, you could do, of course, it all depends on your own level of risk. You're the one that's executing. So, these are just ideas. These are kind of ranges. These are things you need to pay attention to. And then from there, what you do is obviously you'll choose to do it or not. And so obviously depending on a lot of conditions. But yes, that's the general idea.
You'll put in a sell stop or a buy stop, depending if long or short. So that really is the ultimate discipline, because you pull the trigger when you bought it and you already put in your sell order and you're there.
Exactly.
Yeah, that's a good thing, because anything that you can do to take the emotion out of your choices, that's going to make you money. Because every time I've lost money, and I've lost big money like a lot of people, it's because I went with my emotions rather than going with the facts. Like when the dot-coms were blowing up, it was like, oh, gee, I don't want to sell off all these mutual funds that I have that have made so much money, because then I'll have to pay taxes.
Yeah, right.
So I didn't have to worry about the taxes. I eliminated my tax burden entirely.
Right.
I should say I gave back all my profits and wound up with losses, which subsequently I've been a little bit smarter and have managed to get out when stocks go up, because it's so tempting just to ride the thing to the moon, and then you wind up at the bottom of the Atlantic with the Titanic. Yeah.
Oh, I hear you. And that's the whole. And that's the whole point. The whole point is the other thing this is geared for, and the way that it's designed, is for a time period. If this thing does not play out, let's say by 30 days, I'm just picking that right now, we kind of think of it as dead. Right. We're like, what? If it's not going to do its thing, if you're not going to see a move, it's not going to do it. You got to be really careful that it can actually turn around against you.
Sure.
So we kind of, are concerned about that and look at that as kind of like, you have three components. You have a pricing and you have time now here. Because after a certain point, we say, these are expired. There's other things that will come up to play. And we actually put out performance. We started tracking a while ago, but we started officially with it open on March 1st. And we're, there's 25 or 30 different positions that went in long and short during different market conditions. And I believe that we have about a 65 or 68% accuracy of calls. That actually was down from 75 the week before, and it moves week to week, of course. We kind of move it up and down. We calculate it. If we can maintain that 70% accuracy and limit our downside risk on some of this, that's exactly what we're looking for.
That's great. If you could win 55% of the time in the sports book, you could make a living doing it. Certainly that's the case here. It's really exciting that this kind of information is available to you, the individual investor, because this is what the big guys on the street, this is what they use to crush the individual. And now, effectively, you're putting the individual on a more level playing field. You're never going to be totally level, but at least you're up there and you have a fighting shot, and you can probably do pretty well over the long run. So it's triggerpointresearch.com. Yep,
triggerpointresearch.com. You can go there, and there's different levels of opportunity. And you know what I'll do? If you want, I will provide a coupon for your listeners.
Hey, that would be phenomenal. We'll put it up on the resource tab.
Yeah, I'll tell you, we'll do a certain date. It will be good for, let's say, 2 weeks.
Oh, cool.
And it will be a nice little discount for the first month service. I'll get a coupon number over to you.
Excellent. We will put that up on the resource tab at financialsurvivalnetwork.com. You can also get there by going to kerrylutz.com. And Andrew, as always, it's been a pleasure. And if people want to contact you, learn more about your other endeavors, where do they find you?
Just look up Andrew Horowitz, at Andrew Horowitz on Twitter. You can go to, of course, thedisciplinedinvestor.com or horowitzandcompany.com. One long word.
All right. Been great talking to you. And
Thanks.
This market is really exciting. Looks like it's due for a little breather now, but my feel is, so goes January, so goes the year.
I hear you. Yep, a little bit of undulation here, but I got to tell you something. I'm seeing some things. The big thing is, if you can kind of see the forest through the trees, is what we're really trying to accomplish with this trigger point and with our management. But if you can see some of these individual positions outside of the markets, it's pretty interesting stuff, both sides, up and down. Interesting stuff happening.
Absolutely. All right, Andrew, we'll talk to you again soon.
All right, thanks. Bye-bye.
Be well.